Morning, this is BloombergQuint, and we are taking stock of earnings from Godrej Consumer Products. It's been a steady quarter, more importantly, in line with consensus expectations. But after the earnings were announced, there were also certain developments with respect to new launches which the company has planned ahead. To take us through the quarter gone by, as well as what we can expect going forward, I'm in conversation with the Managing Director and CEO of the company, Mr. Vivek Gambhir. Mr. Gambhir, good morning and thanks for taking the time out. I'd like to start off with your assessment of the quarter. We do know that there has been slackness in the previous few quarters. Are you seeing recovery? And let's just stick to the top line in this case. Are you seeing recovery when it comes to volumes, one, in the domestic market, and secondly, eventually when it comes to your international markets as well?
So if you look at the domestic market, our volume growth was about 7% in the quarter. This was the highest volume growth we have achieved over the last 5 quarters. And the volume growth was quite broad-based across categories. So we find this volume growth to be quite encouraging. As far as the overall environment is concerned, frankly, we are not seeing much of a change. It is more or less status quo. The slowdown has been persisting over the last 3 or 4 quarters. Our expectation, though, is that we should start seeing a recovery, particularly in rural India starting from January. But so far, we have not seen any tangible signs of an improvement in the environment. A lot of our volume growth improvements have been driven by actions that the team has taken. There has been a stronger thrust in innovation, and some of the initiatives on the distribution front seem to be working well for us.
Right, Mr. Gambhir, so, I'm going to come back to the conversation that you had with analysts last evening. It was to do with the new launches in the horizon. Keeping in mind the current circumstances, what do you have in store as far as launches are concerned? And also, perhaps if you could give us a rationale behind these launches, especially given the slowdown backdrop.
The need of the hour is for us to actually focus on driving volume growth. In a lot of the categories that we operate in, there is tremendous headroom for growth. And so our belief is that if we delight our consumers and give them more reasons to buy our products through newer innovations, that will help kickstart and drive further growth momentum. And along with that, I think our teams have been working over the last couple of years on a fairly exciting agenda as far as new products are concerned. And our belief again is that whatever slowdown we are seeing is temporary. And so as we look at the future, it is very important for us to be able to have the right kind of product portfolio to be able to drive both penetration and consumption growth. And therefore, across the board, whether it is home insecticides, hair colors, soaps, air fresheners, and laundry, which are the 5 categories that we operate in, you will see a lot of different launches. There have a few that were already announced over the last 3 months, but the momentum will definitely continue because we do believe that one way to get out of this growth slowdown is the continued thrust on new launches.
Right, Mr. Gambhir, but that would also mean more investments into these launches. Does that mean that we can expect a little bit of pressure on operating margins, given that there will be investments going forward, at least in the near term over the next couple of quarters?
We'll have to wait and watch. Our strategy and our priority clearly is to drive volume growth. We're already sitting on very attractive margins. And so if we need to invest for a couple of quarters to be able to drive volume growth, even if it means some pressure on margins, I think we are actually comfortable with making that decision because that will essentially develop the franchise for the future. At an overall consolidated level, I do still believe that we will be able to sustain, if not improve margins. There are opportunities to improve margins in Africa, in Latin America, and in Indonesia. And so if we have to take a call to be able to invest more in the India business to drive volume growth, I think that's a trade-off we are absolutely willing to make. But we'll have to see over the next couple of quarters how the situation evolves.
Mr. Gambhir, can you elaborate a little more about how the situation is currently in Indonesia and Africa? We are seeing some improvement, certainly, but well, if you could tell us a little more about these geographies.
In Indonesia, we have been sustaining strong top line and bottom line growth. Last quarter, we delivered double-digit top line and double-digit profit growth. The momentum is quite strong in Indonesia. The growth was very broad-based across all our categories, home insecticides, air fresheners, baby care, and hair color. Along with that, the team is making very good progress to be able to expand the distribution footprint to cover more general trade outlets as well. The momentum continues, and the team is confident about sustaining the kind of performance you've seen over the last couple of quarters in the second half of the year. In Africa, last quarter, we were pleased with the kind of profit growth the business delivered. Top line growth was a challenge, particularly driven by a slowness in the Nigerian market. The team again is working hard to be able to improve both top line growth and also show continued profit improvement. So while the Africa business does have some challenges, largely in Nigeria, I think I'm quite hopeful that you will see better performance on top line in the second half of the year, along with profit improvements.
Okay, Mr. Gambhir, we leave it at that. Thank you so much for joining us and talking to us here on BloombergQuint.